Good evening, welcome to another episode of the Analyst Hangout here at iBrand TV. My name is Olayemi Akonde. We start off with the gainers and the losers for today. On the gainers chart, we have Caverton topping the gainers list, gaining 10%, moving from 1 naira to 2 kobo and gaining 13.2 kobo. Then, of course, we have Champions, then Lane Africa, Interbrew, and Cadbury. Those are the top 5 gainers for the day. Then on the losers chart, we have Living Trust topping the losers chart, losing 9.68%. And of course, CWG following suit, losing 6.25%. Stanbic losing 6.17%. I mean, that's the biggest, the heavyweight on that list. And then Ikeja Hotels losing 5.19%. And Verista Corp losing 4.55%. So generally, we have more gainers, better gainers, let's put it that way, and lesser of the losers. And of course, today we are going to focus more on how to use earnings to make investment decisions. This is the earnings season, and so many Q1 results, that's Q1 results, talking about January to March, are coming into the market. Some very good and some not so good. But then, what do you need all these results for? Why do you need to know which stock is doing well and which stock is not doing well? Because you need to make a good or better investment decisions. But then we'll talk about it after the break. We'll be right back. Stay with us. Thank you.
The photography business is a very competitive industry. Every year, thousands of talented photo lovers consider turning their passion into a money-making business venture. Especially in a fiercely competitive marketplace like Nigeria, in which it is very easy for anyone to buy a digital camera and call themselves a professional photographer. According to some practitioners, a new photographer who wants a standard studio can start with a budget of 3.5 million naira. However, one can start with a lower budget of about 500,000 to 1 million naira depending on the tools and cost of rent. On the average, the cost of photography equipment is around 294,790 naira. However, the price ranges from around 41,000 naira to as high as 2.46 million naira. Nigeria has a population of over 200 million people with a vibrant movie industry that produces 50 movies per week, generating annual revenue of approximately $590 million from between 2016 and 2021, helping the photography industry as a whole, according to a recent research by the UN. The cosmetics and personal care industry globally generates an estimated annual turnover of around $400 billion over the last 20 years. In Nigeria, the beauty and personal care market could reach 3.2 billion euros by 2021, making Nigeria the rising star in sub-Saharan Africa. Products for hair and body care are predominant on the beauty market in sub-Saharan Africa, where face products and makeup remain marginal but have strong potential. Africa's largest economy clearly has a lot to offer. The Nigerian beauty and personal care market is currently worth more than $1.25 billion at retail and is forecast to reach more than $1.31 billion next year, according to Euromonitor International. It includes a wide range of products from skincare items to makeup and beauty items. These are items that predominantly appeal to women and men alike to purchase beauty products, even though men are interested in cosmetics. Nigeria has emerged as the investment destinations of choice to international firms aiming to capture the beauty and personal care market in the continent.
Welcome back. It's still Analyst Hangout here at iBrand TV. And my name is Olayemi Akonde. I have joining me in the studio Ambrose Omodium. Ambrose is the Ed Research Invest Data Limited. And I have with me on phone John Kanayo, John Kanayo is the head of strategy and research, Imperial Asset Management. So, Ambrose, how are you today?
I'm very fine.
Okay, I can see you looking fine.
Yeah, thank you.
Kanayo, how are you? That's fine. The way you even sound, it shows that the market was hot today. That's good. It's good to have you on the show. Thanks for joining in. Okay, so we want to start now by first discussing why investors need to know why they should be concerned about the earnings of any company in particular. Why should we be bothered about Q1, Q2, Q3, full year? Why? As in, what do they need that information for? So I'm going to start off with Kanayo, because I know Ambrose will have a lot to say. So Kanayo, what do you have to say to that? If you were to advise an investor that, okay, this is why you have to look out for earnings of a company, what are you going to tell him or her?
Yeah, thank you so much for this question. Why should investors be interested on earnings? Why should they look up to earnings as a guide to their investment decision?
Yeah.
You know, earnings is a summary of the general activities of company. It tells you how far the company has been able to operate in terms of management, in terms of operations for a given period of time. Earnings is very important because it shows how the company has been able to use a fund entrusted to them by shareholders within a period of time, within a given period of time. And now, why should investors absolutely be interested on earnings performance? If you look at between Q3 2021 and Q1 2022, we have had a whole couple of challenges in the macroeconomic environment. Take it away from macroeconomic environment to global space, and equally in the you look at in the financial, especially financial sector, there has been a whole lot of challenge, and we have come to face a situation whereby policy-wise or policy decision-wise, we have not been able to see, government able to marshal out or government decisions coming in tandem with the monetary authorities' decision. If you cast your mind very well, moving to Q3 2021 up to now, I think we have seen a NPL staying at 11.5%. There has been a feelers in the market or opinions in the market that MPC should do this and that. There have equally been feelers in the market, opinions in the market that government, talking about fiscal authorities, should be able to take some basic decision in order to drive the economic environment. Why I said we have not been able to see monetary authority, fiscal activities and monetary activity, talking about policy-wise, two of them converging together to drive economic activities is what I have pointed out here. And we have seen a challenge coming from global environment, talking about Eastern Europe crisis, especially between Russia and Ukraine, which has affected not just only the market environment we have now, has affected the global activities. You talk about commodities, talk about whatever you can bring into factor, has affected the way policy makers bring out or take decision or marshal decision, has equally affected the way investors equally take decisions. So then you move it down to Nigeria investment environment. This has affected the talking about operating cost of businesses, especially those quoted on NS, the company quoted on NSE. This is why investors have to look at earnings, look at how this company has been able to perform especially in Q1. If you look at Q1, before Q1 results started coming out, there has been this concern.
Hello, John. Okay.
Yes.
Because we have a lot to discuss, and I still have to talk to Rotimi and of course Ambrose. Okay, so don't worry. Just pause your thoughts. Okay. I think I have Rotimi Olubi on Zoom. Hello, Rotimi. Hello, Rotimi. Are you there? Okay. Probably still. Okay. Rotimi. Hello. Rotimi, can you hear me? Okay. Ambrose, what do you have to say, just in brief? What do you have to say regarding why investors should? Because we have a lot of earnings to actually consider, but we need to find out why they should even bother about it.
Like your question just go, earnings count in any market cycle. You know, like Kana was trying to paraphrase, I tell you that earnings is scorecard for any management. Whether your product is good, you have a good management or not, it is that scorecard to know whether you have done well within that period, whether you're able to put the resources under your care into good use and produce value for your shareholders. That is the summary of earnings. The good thing is that it gives direction where the company is going, and this is what equity price feed on. You know, whether the price will go up or not, because this is what comes every quarter. That means in a year you expect it to come 4 times in a year. Like just like as we send our kids to school, they come with report card to know how they are performed. So it is for quoted company. Yeah. The good thing is that for an investor, you need to know, is the company earnings on trending up or trending down? How consistent do they release their number? You need to know all this so that you know what we are doing. Then if you want to make decision to pick a particular stock, you need to do a core comparison analysis within that sector to see the companies in that sector who trying to perform, whether it's undervalued, that you see that it has an upside potential to rally up. Then once you see the earnings, it gives you like a prompter, an insight, where it's going. Then that earning grade, you should jump in at this price. That is why earnings is what equity feed. And that's why I say earnings count either in a bear market or in a bull market.
All right, thank you, Bruce. Thank you for giving us so much. So now let's go and look at some report sheets. Hello, Rotimi, are you there? I'm really trying to get Rotimi to be on board because okay. Let's look at some results. Let's start from cement. So we had 3 results that we need to look at. Kanai, are you still there?
Yes, I'm here with
Okay, fantastic. Okay, so we're looking at 3 cement companies. I'm going to look at the numbers together. I mean, the 3 of them. Then we can talk about them together. Let's start with Dangote Cement. Dangote is like the biggest in the market when it comes to cement. Exactly. Okay, so when Dangote coughs, the market actually catches cold.
Exactly.
So Dangote with a revenue as of Q1, that's January to March, it grew its revenue to 413.18 billion. That's 24%. I mean 24.21% against last quarter. Now, it grew its profit after tax by 17.99 also, and the profit margin was just relatively changed from 26.97% last year to 25.62% this year, quarter on quarter. Now, if you look at Boa Cement too, Boa also grew its revenue from by 58.51%, coming from 61.19 billion to 96.99 billion, and then profit after tax also went up by 48.14%, and well, the profit margin was also slightly different from last year. But if you look at Lafarge, Lafarge is actually the one that actually interested me. Let's leave Dangote Cement aside because that's a big boy. Dangote will comfortably swallow Boa and Lafarge without coffee.
Yes.
Yeah. If you look at the revenue, revenue-wise, if you look at the revenue, swallow it without coffee. Okay, so but if you look at Lafarge and Boa, and you look at the profit margin, it looks like Lafarge is, when you look at the profit, the revenue to profit after tax, is lower than Boa, because their profit margin is actually 19.41. Although it grew, it was 12.79 last quarter, 2021, but it's 2022 is 19.4. So if you compare it comparatively year on year, it's like they improved. But when you compare them to a similar cement company in the sector, like Yeboah, the profit margin is not that impressive. So I'm wondering, is there anything particular happening in Lafarge that is bringing it down, or something particular that is happening in BUA that is making it record that profit?
Actually, you know, BUA is like a big company coming together. BUA Cement and CCN coming together. That means BUA has a bigger market in the north. But if you look at Lafarge, Lafarge has more presence in the southwest and you know, taking coverage of all this. But if you look at the performance, that is what, like you just said, we want to look at what comes to investors at the end of the day, and that comes to with the earning per share. You know, we want to see what is the profit after tax, after a company that pay, you know, your cost of say, you know, tax, what is left for investor. Is that earning per share?
It's actually fantastic, though.
Yeah.
Their profit tax went from 9.14 billion of last year to 17.56 billion. Wow, that's 92.2.
Yeah, that's what.
Actually, that's
what I'm doing. You know, if you look at what comes to you and I, because that is why we're investing. I want to know after everything, what comes to me. That's why I put my money in that company, because I have confidence in them. You can see that there's improvement from just 57 kobo to 109 kobo. As we speak now, after Dangote, the next earning per share attractive as a first quarter is a Lafarge.
Dangote Cement.
Yeah, after
in that sector.
Yes, in that sector is Lafarge. After Lafarge, because Lafarge is having 190 kobo as well, 199 kobo as to speak. Why BUA that is selling almost around 74 naira as to speak now is having just 96 kobo earning per share. If for me, I see more value in WAPCO as we speak now, then because they are having almost the same share in issue. Both BUA and Lafarge are the same point, even compared to what the Dangote has. So for me, I see more, you know, upside potential for Lafarge. And at the same time, Lafarge has just started a new kind of history to we're going to history after 3 times. Now, last year they paid the interim dividend for second quarter. It's more likely to repeat itself this year. That is what we're looking at. But if you look at also, the industry has successfully increased prices of cement. That's why all of them are checking out good number, because they have already increased their price. And the demand for cement is still high. But that is increased in price. For that, we expect that is a sector, you know, many people are looking at. Don't forget that we're also having an infrastructure gap in Nigeria. We want to build our railway, we want to build our roads. Also, we're talking of even an estate, kind of housing in Nigeria is still not enough. For that, the demand for that, you know, product is high. That means that sector will see a whole lot of potential for them. But seeing the life of Dangote selling almost 300 naira, while you are seeing BUA selling around 75, and this Lafarge is selling below 30 naira, around 28, 27. For me, it's a giveaway for investors that are designing, because especially every investment is against the future. That means, actually, look at the future, this number should guide where they are going. And I said already in May, looking for their second quarter around this time in July. For me, I see potential in Lafarge, but in all, the 3 companies have done well in terms of performance.
Fantastic. We'll go on a short break, and when we return, we focus on another sector. Stay with